Wouldn't it be cool if you could actually figure out which way interest rates were going to go? Because if you could, then you could figure out which way property markets were going to go, share markets, crypto markets. You'd be able to figure out a lot of it because as money becomes cheaper and more abundant in supply, it finds its way into asset prices, which inflate and then eventually they pop. But in the process, it releases more currency into the economic system. So I'm talking about the law of supply and demand. You can see it in pretty much every situation. But as it relates to money, this is really important if you're using debt to invest, because the more of something there is, the higher the supply, the lower the price gets. So if the central bank and government do what they can to increase the money supply, they're increasing the supply of money, which, demand being the same, decreases the price. That's when interest rates drop. What happens though when demand gets stoked? Well, then it pushes the price back up again. So when new money initially gets created, we see that in the form of cheap rates and abundant credit. Then we see asset price inflation. No matter the market, they go up because when we're all sorted, anything above what we need usually finds its way into provisions for the future. That's why investments pick up when quantitative easing was high. New currency growth can't outpace GDP, or in other words, central banks and governments can't create new credit at a rate which is faster than the rate of productivity increase in the economy. If they do, we get inflation. But I want to know everything that will affect interest rates, both in the positive and in the negative direction. Because if I know by how much, in which direction, and over what time frame, I, as a borrower, can fix my mortgage accordingly to cut through the high interest rate times and refix at a much lower rate in the future. When we look at global liquidity or the amount of new currency out there searching for a home, when we see that rising consistently, we know we're in an environment where the tide is lifting all boats. But what's interesting is that by looking at these patterns, you can kind of see a case for both interest rates going up and staying higher for longer right now, or doing the reverse, coming back down quite quickly. That's why it's really hard to figure out which way things are actually going to go. If you have any opinions as to which way you think interest rates are going to go and over what time frame, I'd love to know in the comments. So please do feel free to let me know your thoughts. Cool. We'll catch you in the next one.